This is Modern Mindset, the show that picks the brains of the world's leading minds to help you unlock yours. I'm your host, Adam Cox, and joining me today, we have property investor and founder of KAF Properties, Sarah Flynn. Welcome to the show.
Hi, Adam. Thank you so much for having me. It's a pleasure to be here.
More than welcome. So we're going to be talking investment, but it sounds like you haven't always been an investor. It sounds like you had a bit of a corporate life originally. Tell us about what you were doing for the lion's share of your career and what was the catalyst that prompted that change in direction?
Yeah, thank you. Um, for the majority of my life, pretty much from being 18 when I left school, my mum was in banking and she'd always been there. And I sort of had an idea about what I wanted to do. And I think the majority of my idea was really to go to uni and get drunk for 3 years. And she really wasn't buying that. So she very quickly said, "You need a real job. Come work at the bank with me and we'll look after you." And that's what I did, really. And that was fine. And I worked my way up and I sort of went from Yorkshire Bank, where I started, to Lloyd's Banking Group and had a very successful career there. I ended up in working lots of high pressure roles, which was fantastic. So I did anything from kind of sales, operational manager roles, right through to sort of risk and audit, and overseeing some large scale change projects. And that was great, and everything was going fine. And really, in my mind, that was kind of how I'd paved my life. So I was just going to keep getting these promotions. The money was going to keep coming in. And that's how I saw my life until retirement, really. And then in 2015, everything sort of changed for me. So I was sat at work, and I came home and my brother came round to see me. At the time, he was 19 and he was an electrician by trade. So he'd come over just to fit a light fitting for me. And we were chatting away, and he just sort of mentioned that he had this pain in his back, and he was an avid bodybuilder, big guy. And I just sort of made a joke that he'd been lifting heavy weights at the gym that clearly were too much for him, and he strained himself. Anyway, we had a bit of a laugh about it and off he went. Anyway, the long and short of that was 3 weeks later, that pain didn't go away and he ended up sort of lifeless, crippled, in agony in hospital on a bed. And after sort of multiple tests and undergoing all this awful waiting and rigmarole, they came back and they took me and my mum and dad in a room and just unfortunately said that my brother had blood cancer. And now, obviously, as you can imagine, that was incredibly horrific and harrowing time for all of us, and something that was really unexpected. But, it was never terminal and the trajectory was always good. And they'd said, prognosis was great. He just had to get through this chemotherapy. There was no reason why he shouldn't make a full recovery. However, 7 months later, so now we're talking March 2016, we were sort of at the end of the road with that. So my brother had been in and out of hospital, predominantly in, to be honest. And because he was classed as a teenager, we were allowed to sleep at the hospital with him. So I basically spent most of my time going to work and then on an evening going to look after my brother and sleeping over and then back to work. And it was a very long, drawn out process. And the chemotherapy had really started to take a toll on his body, and it sort of kept working and not working, and it really felt like we were sort of one step forward, two steps back, to be honest. And we got to March and we kind of reached what the doctors were saying was the last chance saloon, and they said there was this sort of new drugs trial that he could go on, and that really was the last resort for him. So he got placed on the drugs trial to go through some what they call immunotherapy, which is like a much gentler version of chemotherapy. um, and sadly that just didn't work out for him. So I think everything else that had been going on leading up to that point, it was already maybe too late. And he literally went on the 21st of March. He went from being sat up in bed talking to me at 9 a.m. We were laughing and joking, to sort of having this hole in his stomach at 4 p.m. and being admitted to ICU. And then about 9 o'clock, they just came to speak to us and just said, look, your brother's in a really bad way. He needs some urgent surgery, but the surgery will kill him. So it looks as though he's going to pass away, and it's going to be tonight. And lo and behold, unfortunately, he passed away at 11:15 that evening. So, everything that I'd ever known in my life just fell apart, to be honest. But kind of through that hurt and anguish, what was also happening to me was something that I personally experienced called post-traumatic growth. And though I was having all this awful grief, I suppose, it also, what was sort of happening was this internal desire that I wanted to just do something different and better and meaningful. You know, and I just thought, you know, I can't go back to work. I didn't want to, you know, I had too many associations with my brother in the hospital and things anyway. And my brother had always been into property, and we always said we were going to do something together, and we were always on this mad race to be the first millionaire, and we never knew who was going to get there. And I just thought, you know, I need to do something that honors him, that's more meaningful and true to me, and that I'm passionate about. And that was essentially how I founded our company now, KAF Properties, which is a property investment business where we partner with people globally to invest in property in the UK. So a complete U-turn, obviously, from where I started my life. And I never, ever, ever expected to be where I am today. But, you know, that was obviously the path that I was destined for.
Absolutely. And I think it's fantastic that you were able to take something positive and meaningful from something so tragic, you know, particularly such a young age for a brother. In terms of property itself, you know, obviously property investment can be quite intimidating for some people, frightening, you know. Obviously you with your finance and corporate finance background, very probably comfortable with number crunching and kind of analyzing return and all this kind of stuff. What do you think is the key thing that stops people from even exploring property investment as a wealth strategy?
Yeah, I think that's a great question. For me, there's three big things actually. So I think there's fear, time, and knowledge. So if you break that down, if we look at fear first, and that's obviously the hugest, you know, the biggest one without a doubt, and it's something to me that stops everybody doing everything in life. And again, that comes down to mindset. But there's kind of the fear of investing itself, and also the fear of losing money. And I think that's completely understandable. And you know, as I've kind of just highlighted, it took an awful lot for me to change my mindset and take that leap. But I think one of the ways that you can overcome that is, you know, maybe by a bit of hand holding. So look for people that are already experts in that field, or maybe get yourself like a property mentor. That was something that I did a little bit later on, more so because I was trying to hone my skills and, you know, really kind of fine tune them. But I think if you're talking about fear, and preventing yourself from taking that leap, maybe find somebody who's going to hold your hand and just kind of get through those early stages, because it is important. You know, everybody sometimes needs someone to bounce off, and, you know, just a bit of reassurance, you know, that everything's going to be okay, because it is scary. It's a lot of money that you're putting into something, you know, you're not talking a couple of pounds. So I think that that's the first piece. The second piece is definitely knowledge. You know, that's a big thing, and something that I definitely came across and fell short on in the early stages. I know we spoke about just briefly before we started the podcast today. My very early stages were all about doing flips, which, for anybody that's listening that doesn't know, that is where you would buy a property in a distressed state, you would refurbish it and sell it on the open market. And that's basically all I did for 18 months, which, you know, seemed fine. But then the reality of it was that a lot of the time I was sat with these houses, lovely houses that I'd done up on the market, but for whatever reason, they weren't selling because it just wasn't the right time. And I just didn't know, because I'd not spent enough time educating myself in it. So there's lots of things out there that I think you can go and do. And again, that might be through getting a property mentor, but I did a lot of it myself. I went and found some really great property companies that are out there that you can pay a bit of money, and in return do lots of different courses on lots of different strategies and understanding your investment area and how to invest, and, you know, why you should do it, looking for supply and demand. And they were all things that I just knew absolutely nothing about. But, you know, paying that money was worth its weight in gold for me, just to really understand and get to grips with the UK market. So I think knowledge is another piece. And then the final piece, as I said, is definitely time. So there'll be lots of people out there that are sat, particularly now, you know, with money in the bank, that's earning absolutely nothing. But just, you know, that really busy, that business owners themselves, or the partners in law firms or whatever, and they just don't have the physical time to go out and do that. And that's where somebody, I suppose, like me would come in. You know, you could, that's what the premises of my business is. It's for people who are time poor, you know, that want the great returns that property can provide. So in that case, it might be, you know, looking to partner with somebody who is in property, and that can just be a foot in the door to help you start understanding. Because one of the things that I personally do when we invest, when people invest with us, is we offer a service, if they choose to, that they can come and kind of learn on the job. So it might be that they just come to the site of the project that they've invested in, I don't know, once every 2 weeks or once a month, and just get a bit of insight and knowledge and kind of learn that way as well if you are sort of time poor. So I think they're the three main things for me that I see and I hear people come across time and time again when they're thinking of investing in property.
Massively. And that fear one was certainly the reason why I got my first property. How old was I? About 26. And I should have done it when I was 21, because when I was 21, I was eligible for a graduate mortgage. And the graduate mortgage back then, they were willing to lend me 115% of the value of the property. So I required no deposit, and they would give me more money to improve that. And I mean, knowing what I know now, I was crazy not to take it. But back then, I was like, oh, but there's a bit of a risk here. And what if property prices go down? You know, had I bought the property back then, it would be worth like 4 times what it was. But you know, it's the fear of the unknown. You know, if you haven't had that experience, you don't really know what you're doing. And actually, you only get the experience by doing it. And by doing it, you've got to take that kind of jump at some level. Um, there's obviously different types of properties. And when people hear about property investing, initially, for most people, the term property, they're thinking about their own home. So let's say they have their own home and then they're thinking about another property. For most people, buy to let would be, you know, the simplest thing to get their head around. So buy a second property, rent that out, and as long as the rent covers the mortgage, that could create wealth over time. What's your opinion on buy to let overall as a strategy, and particularly with the changes that have taken place over the last few years? So let's say not being able to offset the mortgage interest from income and things like that. Is it still an appealing strategy for people, do you think?
I think that really depends on what you're in it for. So you have people that just want a bit of a side hustle. So it might be that they've got the great 9 to 5 role set up, but they're thinking, maybe longer term, I'd like a bit of an extra retirement package. Then I think something like a buy to let is great because it's really easy going. You can manage it yourself if you've only got a couple. You generally get good long term tenants. Anywhere now, sort of 3 to 10 years, people are staying in buy to let properties. So you've kind of got that really steady income, that you're safe. And then that's really nice if that works. And I think, like you say, it can be lucrative, but it is a longer term strategy for me over time, because when I look at that and what you really make off it, it is a side piece, unless you have 20, 30, 40 of them really. And that takes time to build up. It's a longer term gain. So because you're getting obviously maybe £200 or £300 in addition to whatever your mortgage payment is, which is nice, but it's only a supplementary income. It's not going to pay the bills ultimately. And like you say, it will appreciate over time. And then you've got the long term gain. Like you say, you could sell it in, whatever it is, 10, 20 years and make a nice wedge out of it. But that really is a very long term strategy. And I think that was something that I found early on. So I looked at buy to let and I thought, is that for me? But bearing in mind that I'd taken the decision to quit work and this was going to be my livelihood, it just wasn't going to serve its purpose. Like, I needed money and I needed money fast. And it was important to me that I found a strategy that would work for me and provide a sort of quick and steady income, to be honest. And that's how I got into HMOs. So that's houses of multiple occupation, for anybody that's not sure, more commonly known as a house share, which is essentially where you would rent, as opposed to the whole house, you rent by the room. So there'd be lots of different unrelated people sharing together. And it might be that some of the rooms have got en suites, or it could be that they share a bathroom, but predominantly they would always share a kitchen and a living area. And that's the general setup of a house share. And one of the big appeals of that is that you would always include all the bills, everything from the gas, water, electric, council tax, right down to the Wi-Fi, the whole shebang. Everything would be in the price of the room, and that's just to make it a really easy sell for people. And when I started looking at this as a strategy, I very quickly for me became a no-brainer, because I realized that a house that I could get £1,000 a month for, I could get £3,500 a month for if I rented it by the room. And when I started looking at it from a numbers game, it just seemed absolutely silly not to do it, because why would I have 10 properties that are making me, I don't know, £10,000 a month if I could have 3 that make me the same amount. It just didn't make sense to me to buy in volume if I could spend the same amount of money and make a lot more. So that was one of the reasons why I fell into it. It also works very well for our business because obviously, because of the amount of money involved in a HMO, there's enough surplus to be able to pay the investor a really nice sum every month as well. So it was a bit twofold, but predominantly it was going to give me the cash that I needed really quickly, and that was why it worked for me. So I think it really does depend. There's the bigger stuff as well, like there's lots of people that do big developments. That is on the cards for me probably in the next sort of year to 18 months, and I would like to sort of get back into flips, but on a huge level, looking at doing sort of small developments, maybe sort of 8-10 houses would be lovely. And there again, that's if you're looking for a bit of a longer term game, but a much bigger cash lump sum. So I think it really depends what you're in it for. Like, you have to understand your why, and I think if you don't, then you probably won't get the strategy right. What is it you want? Do you want to supplement a holiday every year? Then maybe a couple of buy-to-lets is okay. Is it going to be your livelihood? Then maybe you need to be thinking a bit bigger. So I do think it's very dependent on your situation.
Very dependent, because I think time is one of the key things. And
Mhm.
I've got a small portfolio of about 10 properties, and the one that I struggled with the most was the HMO, because time is my scarce resource, and HMOs are much more time hungry than, let's say,
Mhm.
other things, and hassle hungry as well. There's
Yeah.
more kind of moving parts, but if you can get that right and you can kind of find good people to do it, then it has much higher cash flows than maybe other properties. In terms of, let's say, wealth strategies,
Mhm.
how does property compare with other ways of becoming? You said you had that goal of racing your brother to be a millionaire, and of course, there's multiple ways of doing that. You've got business, you've got property, you've got stocks and shares. In your opinion, how does property compare with other ways of kind of becoming wealthy?
Yeah, I think that's a really great question because, obviously there were very strong links to property for me because my brother was an electrician. But ironically, the other thing that he'd always done was traded, predominantly in Forex, actually. And I think he probably thought that that was going to be partly how he was going to make his millions. And I think there's many ways to make money, and it's not about wrong or right. But I think for me, the advantage, I would say, of property, and one of the reasons, many reasons that I chose it, I suppose, was because in my opinion it's one of the safest investments you can make. And that was really when I looked back at the trends and the history of property and how that works. Pretty much since the beginning of the property market that's ever been recorded, property prices have doubled every 10 years, and that's been very, very consistent no matter really what goes on. So you will always see a dip, and we have what we call the 18-year property cycle, which is basically the kind of ups and downs and trends of how property works. But ultimately, it always comes out shining at the end of the 18 years, and it's always better than where it originally was. And I think that was kind of an attractive point to me, is that it was something tangible that I could see, that I could feel, I could touch, I could control. And I knew that there was that sort of forever history there, that it was going to be a really safe investment, that although there may be periods where the market dips, as long as you understand that, you can never really lose, not if you're keeping the houses long term anyway. So I think for me, that was kind of the attraction, and why I sort of felt overall that out of any sort of wealth creation strategy, that it was the best one for me.
Absolutely, and it can go hand in hand with other things.
Yeah.
My business, my first business, proper business, was a PR company. I still have that company, but I decided that when I was going to take on staff, I didn't want to rent premises and then have the staff in there, because then effectively I'm kind of helping someone else's asset. So you'll probably think I'm crazy for doing this, but my first property, I actually bought a commercial property at auction, having never bought any property before, never gone to an auction before, and it's a terrifying experience. And at the point where the hammer went down, and the look of shock on my face when I'd won this property, they clearly saw I was, what was I, 25, 26 years old. They ushered me to the back of the room. They got me to sign this form. They took my debit card off me, and they said, right, you've got to pay 10% deposit. And then they said, right, I've got 28 days to find the rest of the money. Otherwise I lose that 10%. And you get highly resourceful at kind of finding
Mhm.
finance and doing
Mhm.
things. And that first property, I mean, I'm in it right now. It's quadrupled in value since I bought it, and had I been renting that premises from someone else, all of that appreciation would have been someone else's wealth
Mhm.
rather than my wealth. So I'm a big fan of property, but it does, yeah, I wouldn't recommend for anyone to do what I did and just kind of
But
go
I
ahead.
do think that's a really interesting point that you bring up, actually, because that raises a wider question about although it is property related, it doesn't have to be about raising finance, and obviously I raise finance for properties and that's how I move forward in my business. But there'll be many people that also just want to raise finance because they want to start a business, or they need money for whatever it's going to be that they want to do to create more wealth. Um, and I think it's really interesting what you say is the point of the hammer went down. Suddenly you got really resourceful. Now, equally, I think the reason I think that's interesting is because obviously in my business, the way I operate is I offer on properties and I get them accepted with absolutely no funds and no idea at that point of how I'm gonna how I'm gonna remotely raise the finance to do it. But somehow I always find it. And I just think I think that's really interesting, because one of the biggest things that puts people off is that, like, oh, I've got no money to start, and what am I going to do and how am I going to raise it? And obviously I've spent a lot of time building up kind of my own portfolio of private investors that I work with, that we go out to, and when we get a deal, we'll say, this is the new deal, this is the percentage that it's going to pay return, is anybody interested? And we've just got what's the word, like a mailing list that we send them out to, and then they will come back and register their interest. But we still get times where all those investors for whatever reason aren't able to fund the deal, and then I still have to go find the funds elsewhere. And I think it's just an interesting point, because for anybody that's listening that money is the biggest fear, trust me, if you just throw yourself into it and you commit to something, once the pressure's on, as Adam said, you will absolutely find the money by hook or crook. It's amazing what your mind comes up with when it knows it's got to do something.
No, I couldn't agree more. You get highly resourceful when you need to. It's that saying, if you want to take the island, burn the boats. If when you've got no other option, you find a way. Because step one was me getting the finance in place, the other, what did I need? 70% of the amount. And then when I had the property, it had no electricity, it had no carpets, it had no heating, it had no furniture. And then you find a way, and there are lots of different sources of finance that you can use, but equally sometimes going out there and making the money is the best source of finance, because you don't have to pay the interest on it. If you're looking into your crystal ball, given that we're on the verge of a second lockdown, a lot of these bounce back loans potentially have already been kind of spent. People on furlough, perhaps, yes, it's been extended a while, but we don't know how long that's going to carry on. There isn't this kind of bottomless pit of money that is available. What's your prediction as to what's going to happen in the property market, maybe over the next 6 months or a year?
Yeah, I think that's a fantastic question, and it's one that's on every property investor's lips at the minute. And all we can do really is look at what's happened previously in the world and in pandemics. So I think from my own research, I think there's like 5 major pandemics that have happened in the UK over the last 100 years, I think it was. And, generally speaking, we always recover, but I think it's important to note that we do always take a dip. And I think that dip's actually been prolonged. So when you look at what normally happens in the ebbs and flows of the property world, we were actually due a recession back when Brexit happened, and that was coming. And I think, for me and a lot of other investors, we were all gearing up to buy, and we were thinking this is going to be the time, the market's going to dip, there's going to be loads of opportunity. And then it didn't happen because Brexit just became COVID. So we've had this like really prolonged period, I feel now, where we've been safeguarded by, the government funding, like you were saying, and everything else that's been going on. But like you say, all that is coming to an end now. So it really is only a matter of time. And, whilst these things that have been offered by the government have been extended slightly, as you say, by the end of the year, they are very much coming to an end. So I feel, sadly, unfortunately, that there is going to be an abundance of opportunity. The market has to crash. I think it's almost imminent, not tomorrow, but I think in the next 2 or 3 months, definitely the quarter one of next year, without a doubt, that has to happen. It just can't be sustained as it is. Um, Also, there's the big issue at the minute of, whilst the market looks flush and amazing, and it's off the scale, and everyone's reporting that there's a record high of sales being made, the reality actually is under the skin. 65% of those properties are falling through because the people that wanted to buy the property are now not in the same financial position, or equally the lenders are tightening the belt, so people are getting right through to completion, and then the lenders going, actually, just a minute, we've decided that we don't want to lend you the money anymore, or not as much money as we were going to do. And that's putting people in a lot of hot water. So, to me, the surface of the stats are not the reality of what's happening, and everything that's going on in the background is really pointing towards that crash coming at the early part of next year. But if you're thinking of getting to a property investing, that does mean that it's never been a better time. You should always buy when the market's low, and we're hitting a recession because that's when the best deals are to be had. It's all about buying low, and then letting it appreciate over time. So there is never going to be a better time to buy property. It's just unfortunate that it takes these sort of things to happen in the world, for the opportunities to be there, I suppose.
Yeah, it's the equivalent of a forest fire. There's absolute chaos, but then there's new things that kind of can grow and be taken from that. Because for me, the vast majority of the properties that I have now, I bought in 2009, 2010, after the credit crunch. And it was crazy. I was buying properties that were about 50%, not even of their peak value, but of the land registry previous sold price. And it's like the equivalent of January sale shopping, but for
Yeah.
property. You can get some. And at that point, you can't really lose because you're buying the equity at the point of the property, of the transaction. So even if it does go down a bit, you're still inoculated from that. In terms of interest rates, because that's another variable that, again, we've had a very long period of record low interest rates. If there is a property crash, and with the uncertainty with Brexit and COVID and the likes, what's your prediction as what's going to happen with interest rates maybe over the next couple of years?
Do you know, I think that's a fantastic question. And I just think it's something that is really up in the air, actually, because people are really predicting very different things. Some people are saying, well, it's got to stay low because otherwise, how is the economy going to work? But then equally, other people are saying, oh, it's going to go high because, the lenders are nervous and they want to make more money, and it has never been more uncertain. My personal opinion is I think that they will stay low. And I think that will be dictated by the government. I just think, in the Bank of England, I think personally we're in such a state of disarray that they have to, make things affordable and open to people. But there has been a funny period, just the other day I was speaking to my business mentor, and she's got a big property portfolio, and she was saying that actually she's had some of the mortgages and refinances that they've been doing, her and her husband, the mortgage rates have been higher than they've ever been, actually, and that is just because of the uncertainty. But I think overall, I think they're going to stay low. I think they've just got to. There's no way out of it at the minute. And I think the fact that we went into this sort of emergency Bank of England base rate that they called it, a record low of 0.01, absolutely unheard of. I just don't see that changing anytime soon at the minute. I think the economy needs to rectify itself. And I think, from that perspective, we are quite good as a country at kind of doing everything we can to sort of help people out financially. So I think I can't foresee it changing for a while, but who knows? I might be wrong. It's a very uncertain time out there.
Yeah, nobody could have predicted this year, a
No.
year ago. So, there is so many unknown variables. You said that, a crash is a good time for investors to, kind of get into the market. Buying low, you can kind of get the gains quicker that way. What would someone need to do now to prepare so that, let's say, 6 months time, there are those opportunities?
Mhm.
What can they do in advance to really take advantage and kind of get their ducks in a row?
Yeah, I think first of all, you need to make sure that you've got that your finances are in order, and I think that's one of the biggest things, without a doubt. So, I think make sure that you've got a deposit. So obviously, if you're looking at a buy to let, you have to have a 25% deposit. So make sure that you've got that. I think also prepare for a bit more, because let's be honest, it's a very uncertain time. We don't know what lenders are going to decide. They may even want 30% in 6 months. Who knows what they're going to do. So just make sure that you understand the budget and what sort of roughly how much you want to spend on a property, and therefore that you've got the right means to be able to pay for that. And whether, as Adam and I have just touched on, it's that you raise the finance from a private investor or whatever that may be if you don't have it yourself, but make sure you've got that lined up and ready to go. And I think what equally goes hand in hand with that, whilst the lenders are still in this sort of period of tightening the belts and being very stringent about who they lend to, make sure that your credit rating and everything from that perspective is absolutely squeaky clean, because if they can see anything at all, if they've got any reason not to lend to you, that they will at the minute. So financially, that's absolutely huge. And just test the water, see if you can get a mortgage, because it might be that something crops up that tells you that you can't, and then you can rectify that ready in preparation for when the right time comes to purchase. So I think that financially, that's probably one of the absolute biggest things. I think the second thing is really understanding about where you're going to buy. Investment areas is absolutely key. One of the biggest things that I speak to, particularly from some of our overseas investors, they say, oh, we're going to go buy loads of property up in London. And I say, no, definitely not. And they're like, why? But it's the capital city. Is that not where everybody wants to live? And I say, no, it's not a good investment. It might be where everybody wants to live. But, apart from the fact that, it feels like it's about £10 million for a one bed flat down there. There's lots of other reasons why London's not a great area. The capital appreciation actually was going the wrong way. So until last year, it was actually depreciating year on year for about 4 years, because it had just reached its peak a long time ago. So, I think things like that, there's lots of common misconceptions about where you should buy property. And so I think it's very, very, very important that you do your research to understand exactly where it's going to be and why. A great place to buy property at the minute is actually Yorkshire. So, and I'm not just saying that because I'm based there. All my property is in Yorkshire as well. And actually, luckily, I suppose it couldn't have been in a better place. It's predicted to appreciate over 21%, I think, in the next 3 years, is property in Yorkshire, which is going to be a UK record. So if it does what it's meant to do, as the experts are predicting, that's definitely an amazing place to buy. So that would be my overall suggestion, somewhere in Yorkshire. But again, also looking at areas within that. So it's not just about anywhere in Yorkshire, it's about honing in and understanding where are the good places to buy, where do people want to go, and where do people want to live. And there's loads of data out there that can help you do that. So there's lots of really good property data websites. So actually propertydata.co.uk is a great one. They do a paid service, but they also do a free service, which I've used plenty of times, which gives you lots of information. You just tap in the area or the postcode and it brings you up loads of information about, if it's a rental area, if it's predominantly a owner occupied area, what the demographics are of the people there. And I mean, all that information is free and available at your fingertips. So do the research. I cannot stress that enough, because I just think that's so important to make sure you get the investment right. Because what you don't want to do is buy a property that's really cheap and that sounds great, but then you can't fill it, or you've got the wrong strategy for that area. So I think that's really important.
Mm. Going back 4 or 5 years ago, you made a big change in your life for this reason of, pursuing, financial wealth, but also, personal, I guess, independence, direction over your own life. How has the reality differed from your expectation? Because sometimes when people get into something, it's for a particular reason or an idea. And how did that vary to how things actually are for you?
I think that's an amazing question, because it was only the other day I was speaking to my wife about this actually. I think it's everything I thought it was and everything I didn't think it was, all at the same time, in a way. And I'll just kind of explain that. So I think in terms of everything I thought it wasn't, and I thought, not that obviously I expected it to be hard, and I'm not taking anything away from that, but boy, not as hard as it was. Like, and it gave me the greatest appreciation for people that create wealth. so far beyond anything that I ever imagined. You know, the sheer tenacity and determination and perseverance, and you know, knockback after knockback after knockback after failure after not, you know, and I just think nobody can teach you that, and nobody can understand what that's like until it happens, you know, until you experience that firsthand. So I think the resilience piece, I got through it because I ironically learned resilience from my brother's passing. But I think it's so difficult in the early days, you know, and sometimes you just feel like you're flogging a dead horse when you start a company. And I think that I had an idea, but on no level was I mentally prepared for the sheer slog that was ahead of me. So I think that from that perspective, it differs a lot. And I think, you know, I still work very hard today. And you know, sometimes you can take a week off, which is fantastic, but equally you might be working for 23 hours. And I think that people just don't see the reality of that. A lot of times in a lot of these coaching companies at the minute, you know, that they sort of sell this dream and ideal, you know, you can give us 20 grand and we'll give you all the answers and you never have to do any work. And it's just so far removed from the reality, you know. But then I think in the same instance, when I say it's everything I expected, the rewards speak for themselves. And I think, you know, from that perspective, that's kind of always, you know, as I've seen it. And I don't just mean financially, you know, I mean just from a time element. You know, I just touched on there, my time's my own, and I can do what I want when I want, and nobody can take that away from me. And that was one of the big things for me, actually, was time. Because when my brother passed, it was so important to me that I wanted to look after my parents because they were in such a bad way. And one of the big reasons for me want to you know, sort of go it alone, as it were, was because I knew it would give me that flexibility and freedom to be able to be there for them as and when was necessary. So from that perspective, that kind of happened imminently for me, and that's never gone away, and that's fantastic. And you know, me and my wife have got an 18-month-old son now, and I can spend all the time in the world with him that I want, and I can make that work for me. So if I want to work at midnight, that's up to me, but it does mean that I can spend all day with my son. So I think, you know, it's everything I thought, but it's also everything that I didn't think at the same time. And I think, you know, life's very like that. It throws up lots of unexpected surprises, but I think if you don't throw yourself in, you don't know.
I see it. It's a brutal teacher, and that's what attracted me to business and investing, is that it couldn't care less about gender, race, age. You know, it's entirely based on competency, decision making, you know, putting the work in and learning lessons. And you know, it's not the right environment for a lot of people. You know, some people aren't cut out for it, but for those that are, it's very exciting. It's, you know, it's very rewarding, and it gives freedom and it gives security at the same time, which is, I think, is a fantastic thing. If someone's listening right now and they want to connect with you or learn more about KF Properties, how can they do that?
Yeah, so obviously we've got a website and you can find all sorts about us there, and you can also fill in a little form if you want to speak with me directly, and that's www.kafproperties.co.uk. You can also contact me directly on my email, which is sarahflynn@kafproperties.co.uk as well, if you do want to just contact me directly. But as I say, all the information about how we work and how we work with investors and previous projects and things that we've done are on our website, so you can have a look at that.
Amazing. Sarah, thank you so much for joining me on the show.
No problem. Thank you very much for having me. It's been a pleasure.
And to you at home, thanks for joining me on Modern Mindset. See you again soon for more.